A very good morning to you. Welcome to Good Morning East Africa, and today we have the first episode of Money and Technology. I am your host, Ngugi, and with me in studio is a wonderful gentleman who is our guest today by the name Muhamoud Dualeh. Welcome to the show.
Thank you very much, Wangui. Pleasure to be here with you, and thank you very much for inviting me for your first ever show.
Welcome to the show, and I understand that you're a banker. You're based in Oman, and your role is you're the head of products and value management.
Yeah, that's right. Yes, I work in a bank in Oman. It is a bank we established almost 5.5 years ago, and it is basically an Islamic bank. But as an Islamic bank, we serve all type of customers, all the community, and so on. So I've been based on 5.5 years in Oman now.
You're in the banking sector. Banking is your thing. It's your career. You understand what banking is. So in a general term, what is a bank? Is it more than just a building? And why do people go and put their money in a bank?
Yeah, very interesting question. I mean, you asked because, let's face it, if you think about it now, banking is a huge part of our lives. I think the most of people you meet today, if you ask after the word bank, have they ever heard of the word bank or know what bank is, they will know that. But the question is, what is the function of the bank or a bank or banking system? Bank system basically it facilitates in different functions. There are banks or private banks which serve communities or customers, and the other banks which are a government sort of linked to entities like the central bank, which basically distributes currencies and also regulates or issues policies like monetary policies and so on. So when it comes to the private banks or banks we know customers deal with, these is primarily what they function. If you take the individual level side of it, first they facilitate for customers to keep their money. Talking about deposit taking, and the other function is to meet the needs on the ones of customers. For example, if you want to buy a car, if you want to purchase a house, or also if you want to get a credit card for payment online, for example, you do or travel or buy tickets and so on. So the two levels of banks is one is the deposit taken, another one is advances, which is the finance side of it. Okay, today. So that's the two primary functions. But then there's different types of banks. There are commercial banks or personal banks, retail banks, sorry, or there are the investment banks, which basically provide finance for trades and projects related transactions.
Okay. Now, well, you know, banking in sub-Saharan Africa is not that common. Like, according to the World Bank report, almost 66% of people in sub-Saharan Africa are unbanked. And we know that banking is like a rite of passage for young people. When you're growing up, you look forward to owning a bank account, but people do not understand, like, what does it take to actually own an account? How much money do you need, for instance, to start a bank account?
Right, very good questions. I mean, yes, financial inclusion is a big deal in Africa. I think some other parts of the world as well. To be honest with you, if it's not that difficult. I mean, if there's a bank, when you are the deposit side, when you want to have to start a relationship with banking, depends the bank, the sort of criteria. Some banks, what they do is you want to open normal account, which is the current account. They will say you have to keep minimum deposit in there. For example, $100, $50, or $10, depends on the bank's criteria. And that basically it is to keep there's some balance in the account where it's kind of an operational thing to do it. but you don't need that much money, that huge money, to open the account first, and then gradually you can build your savings. Okay, to date. So that side of, in terms of opening the account and getting your banking services that side, you don't need a lot of money. Okay, and I think banking right now, probably in the Western world and in Middle East, but probably I do not Far East, but I haven't get that experience. Banks, usually this is what's called free banking, where they don't require you to keep a minimum to open the account to establish. They don't need that minimum balance to open the account to do that. So in Africa, I haven't worked it, to be honest with you. But what I believe is that that minimum requirement, that I think it shouldn't be, if it's there, shouldn't be there. So that can include that financial inclusion sort of initiative, which has been started years ago. So that can take effect. But when it comes to taking finance, and so that's that finance side, taking finance from the bank, then the bank requires some credit score and credit eligibility criteria to be run. So some banks, for example, the banks where we work, that you have to have a minimum salary, okay, or minimum level of income. You have to be a certain age, okay, above 18 years old, and then we run some kind of in terms of customer creditworthiness checking in terms of delinquencies and so on and so on. So there's some criteria where we put together and say that criteria, if the client or the customer meets that criteria, and then the bank might consider based on what the customer wants to extend that financing side. So when opening the account, I think that should be probably, but minimum should be either free or minimum sort of deposit to be started the relationship. When the customer wants to take finance, then the bank requires some credit scoring needs to be done.
So generally, almost everybody can open a bank account. But why is it that in Sub-Saharan Africa, we have very few people who own bank accounts, like actually mobile money accounts are more than the traditional bank accounts? What factors are contributing to this?
Yes, very interesting, isn't it? Where we are here now in Somaliland, in Hargeisa, you can say, I think, huge portion of the the community, they have electronic or e-wallet, the version of, in terms of bank deposit. They have it, that they have it. And they don't have actually, there are a few banks here, they don't have a direct relations with those banks, but they have the electronic wallet where they do the transactions, whether they receive money in that account or do the payments. To answer your questions, why that number, percentage of East Africans or Africans, they don't have banking relationships, it is a very long story in there. One is, simply if you put it now, it's a development. There are initiatives now. There's a lot of banks are now established, and I think that's taking shape. But to reduce that, probably it will take a while. But what will change the game is digital banking. Okay, the bank in your pocket. So there's a lot of companies, a lot of banks now investing into the digital banking platforms, but also there's the digital banks are coming into business. So that probably may solve that issue. There are some global initiatives and African initiatives which want to address that issue now, that shortfall on financial inclusion, and so that will take it. What I see is, in my reading, is in the next 20, maybe long period, but 25 to 30 years, you will see a lot of that people, unbanked people now, including in terms of that umbrella, in terms of getting the financial services. It's very critical now that a given society, for example, here, people have get the means to receive money, but also to use that money, whatever transaction payments they need. So that will include in terms of the economy itself, you know. But because when you look at it, what makes the economy grow is the number of transactions included. So the greater the number of transactions, of course, profitable transactions, the economy, the livelihood of people, the lively standings increase.
So is digital banking a threat to traditional banking? Will we come to a time when there will be no more ATMs, for instance? What's the future of traditional banking?
I think ATMs have to go. I mean, to be honest with you, it is, if you look at the banks which run ATMs, it is something they basically love to get rid of it, because the era of now having your bank kind of a wall with the machine sticks out, and then you get your debit card, whatever card, and take money out. It's gone. It's now it's
on the phone.
Electronic on the phone. You can do it. So yes, that will go. But when you said that digital banks threat to traditional banks, the physical branch, some people who knows in the business, they're saying yes, it is. And why do I have to go to a bank to take a car finance while I can get it sitting at home having my whatever cappuccino or my tea through my mobile? Where should I go?
Phone,
Absolutely do it. So in the long run, maturity of a banking system or banking and sort of transactions will be done on smartphones. Yes, that's true.
Okay. Well, livestock production is the key economic driver of the economy of Somalia and Somaliland. How can banks support this sector?
Yeah, absolutely, it's true. It's very. It's not. I don't know whether to use the word chronic problem, but it is a real problem for here in Somaliland, Somalia, and part of Somalia. That trade requires flow of money.
Yes.
Okay. If a trader in remote area wants to sell livestock to a buyer here in the capital, now there must be a form of exchange of the animals and the cash. Yeah. Now that requires a financial system to be working on it, and that's, I think, is a gap within the country itself. That trade business needs to be enhanced, to be improved. And some players come into the industry. That's one level, internal, but also it is problem externally. I mean, import side of it, or export. If we want to, for example, export our goods here or livestock to a foreign country, now then you find how are you going to do that? How the payments going to work out? So it's a huge problem here in Somalia, Somaliland, Puntland, about trade-related transactions. That's going to be done, and I think that requires two initiatives. Probably more than that, but the two initiatives I see is the existing banks to take up the challenge and create the framework and the financial instruments which facilitated that one. Another one is regulatory side of it. The government and the central bank, they should put together an initiatives and framework to address this issue. If not addressed, this issue will continue, and people will do the old-fashioned taking money, in terms of physical money, and going places and then doing the transactions.
Well, it's true the central bank in Somaliland is not fully functional, and this kind of affects the banks that are operating here, because you find that they cannot accept huge amounts of money, and this somehow affects the way the country does international trade. So, like you said, what else can be done to improve the situation?
I haven't get that much detail level in terms of how the Central Bank of Somaliland works, to be honest with you. But I can see in terms of experience in what's happening in terms of here, I'm talking to people. I think it is area where, I said it a few minutes ago, it requires two parties to address the issue. One is the existing banks to come up with financial solutions to address this issue, and this has been there for decades. So they need to create that framework, that policies, which allow the traders to do the business, whether internal or externally. But them alone, I think they cannot do that, solve that. This is where the government or government ministries, party, of course, charged and the central bank to support that level. They can get, if there's the issue is only know-how or capacity with the central bank, the government side. There are institutions which cater for that. I think probably the people who run the central bank and probably related in terms of government-related entities, they should be talking to those expertise to support them.
We also have these big banks that usually fund development projects in various countries. Like you'll find they'll fund the construction of ports, infrastructure, but we kind of do not have that in Somalia or Somaliland. What can these countries do to attract these big banks to come and help in developing their country?
Okay, that's very good questions, and it goes very long in terms of what's happening in the country, what happened in the country. I'm not familiar with what's happening in Somalia and how that area is addressed. Because Somalia is there, and it is member of the United Nations, and also a member of the World Bank, and so on and so on and so on. So that they should be taking the appropriate actions and sort of policies to address that issue. But when it comes to Somaliland, it's obvious because to address those issues, one has to enter contractual agreements with service providers, which means big players, big international companies, to come and do that infrastructure build. But they won't come here because you say, who's Somaliland? Okay, so that needs to be addressed. There's a way to address it. I don't think so it's that complicated. I've seen people saying that, no, this is not going to happen because of that and so on. But it's a solution always. Every problem has got solutions. It might be difficult, the way you address the problem, but you eventually come to a solution to reach it. And I believe if work is done on the key area in terms of the logistics in terms of the infrastructure of the transport related sort of services, ports and airports, those areas where commerce I think the key is, I think there are some ways the government can address and to attract foreign direct investment.
Okay, back to traditional banks right here in the region. You'll find that banks in Somalia and Somaliland or Puntland are operating under the Islamic laws. Does this limit an investor or someone who'd want to bank there and probably they are not comfortable with the Islamic laws, or maybe there are restrictions?
Thank you, Wangui. I'm glad you asked that question. And I often ask that similar questions, and when I'm giving trainings and just talking to people about Islamic banks. Because it says Islamic bank, it doesn't mean it's for Muslims only. The reason it says Islamic bank is because it tells you the principle of what the business is, the bank is based on Islamic tradition. But the actual banking itself, it's for everyone. But usually I say that, I don't know whether I'm right to say it, but usually I say money doesn't have a religion. It is the application what matters to you. And that's what I think has to be clearly and explained to people. Islamic banking, they're not only for Muslims, it's for everyone, whatever background, whatever religion you are. We do the same thing another bank does, but we do it in different way. And in terms of when you look at, to be honest with you, when you look at the Islamic banks, they're more into a trade business because Islamic banks, they don't trade money itself. They do not make interest on. Yes, that's part of it. And when you look at the Islamic banking balance sheet, and when you look at the Islamic bank and activities, they're more directly related to the economy than the traditional banks, because traditional banks, you do so many things, different things, which probably some of them are you say, oh, what is it? What is this? For example, speculations and synthetic products, which doesn't have a real link to the economy itself. All that are not allowed Islamic banks. It allows the trade to take effect. So it's a trade or service-based banking. I hope that helps you.
It helps, yeah. You know, I sometimes people ask, if I'm doing a business that is not allowed by the Islamic religion, and probably I'm a foreigner in a foreign country, and I need banking services, where do I go to? Yeah. And that's why you find that mobile money is coming into place and banking the unbanked, right? Well, still on banking, you deal with bank products and everything, and you understand what a credit card is, what a debit card is, what a MasterCard is. For the sake of someone who doesn't understand the difference, kindly would you tell us the difference between these three cards?
Yes, I'm glad to explain a bit about that. Basically, let's take an example. You just walk into a bank, in a branch, traditional banking now, not the digital one, traditional bank.
Yeah.
And first of all, it's just if you say want to open an account, then you say which type of account you will take. There are saving account where basically it allows you to have your money, access to your money, plus also some earnings. In Islamic banking, we say profit, because the way we structure is slightly different from the conventional. Conventional, probably they get interest-bearing accounts, but Islamic bank is a profit-bearing account, and that comes with a debit card. Okay, so you have now a saving account, and the bank will give you a debit card. That's access to your money. You can come to the branch and tell and take the money out, but convenient if the bank, for example, closes after working hours, you can go to ATM and withdraw money. But also you can use the same debit card to go and buy goods from a merchant using what's called point of sales, the POS, okay, to do that. Now, the card to function, it must have some elements and a network, because plastic it is, that plastic contains now your accounting details, okay, plus a service provider, what's called a scheme provider, and that could be a MasterCard or Visa. These companies, what they do is they provide the payment services between the banks and the merchants and so on, and there's some settlement of transactions and so on amounts happens. So the MasterCard is the scheme provider, means the network which basically connects the payment, the merchant and the bank. Okay. Now, if you take a different product or different account, which is, for example, let's take current account. Current account comes both with a debit card, which is explained, and a checkbook. Okay, and usually the checkbook is useful if you, for example, rented a flat, okay, and you want to pay installment or monthly installment the rent amount, then you can give a check for the next 12 months, each amount for that one, and then the landlord or the company managing the property they submit those checks for processing and debiting your account. So that's although it's now people use less of that product. Okay, so those two things come with the accounts. Okay, now both debit card and the checkbook, whatever transaction performed, those two comes directly from your money in the account. Okay.
Yeah, like it's your money. You're using your own money. You're using
your money, so you have to understand that.
Yeah.
So when you take your debit card, using the
ATM or to pay a bill,
do that, it mines in your account. Okay, your funds goes down.
Yeah.
All right. Okay, when you use it. Now, when you go to the credit card, it's slightly different. Okay, credit cards advance. It is, in the conventional sense, is a pre-approved loan, for example, and the bank sets you, when you qualify, okay, to have the card, the bank will set up a limit for you. Okay, let's assume about, say, $500, and then it will give you a plastic, so you can use that plastic to purchase e-commerce, online transactions you can do, and you can do similar things. You can go to a merchant and purchase goods, or if the bank allows there's a cash advance. You can take money from the ATM as well. Now these are like a loan. Okay, so they will
you borrow and pay later.
Yes,
okay.
Exactly. So the bank basically will give you a period, a window to pay off that money. Okay, in Islamic banking, we don't give loans. We provide the money to the customer. Okay, and then we provide a service. Okay, so the service, the fixed fee services, we charge the customer, and the customer pays back that money. So that is an advance. That's the money given. Provided by the bank, and the bank has to, the customer has to return that money. In the convention, and if you miss that, if you don't provide on due date, they will charge you rate. They will charge you interest on that one. Now, the more you keep that money, you don't pay it off.
Yes.
The more interest you're going to pay.
You're going to pay back.
Because what happens is accumulating that money, and there's a compounding effect that side of it. Islamic banking, totally different. Concept we use is called, the word Arabic I'm going to use called Hassan, which means a loan without interest. So we advance that to the customer. But because we provide services like the plastic, we provide in terms of the management, the statements, of course there's a staff which processing all that in the operational work, we charge fixed fee. So even when you pass the due date, your fixed fee doesn't increase. It's the same fee. Okay, but if on-time payment, you don't get charged. So these are the difference. So debit card, you use your own money.
Your own money. Credit card is borrowed money.
Agreement you would have with the bank to take some money out and pay on due date.
Well, that's really interesting to know, because lots of people do not actually understand the difference between these cards. It's been lovely having you, and in a nutshell, I'd like you to tell us what's the future of banking in Sub-Saharan Africa. Where are we heading to?
I think it's a very bright, and I think the movements and it's happening now in terms of a lot of banks globally, and also banking or financial individuals taking interest in Africa. It's happening. And also you look at the demographic. When you look at in the next, let's say 2025 and 2050 to 2100, half of the world population will be in Africa. And that age, he will be below 40 years old. That's the most productive sort of age group, that side of it. The level of education is increasing. The level of, in terms of business activities, increasing. And also in terms of productivity in those countries, using the natural resources to generate the economy. It's absolutely, it's just increasing that phenomena. When we discuss the financial inclusion, that's happening. The digital world, it's also helping that side of it. Yes, I think the future is bright.
Yeah, indeed, the future is bright, and thank you so much for making our show bright. It was the first episode. We really enjoyed learning a lot from you in the banking sector, and we would love to have you again and again and again. Thank you so much.
Wangui, thank you very much. Pleasure. I'm absolutely delighted to be here, and I'll be also more happy to come back to you whenever you get invited. Thank you.
Well, thank you. That was Muhamoud Dualeh, and have a lovely day.